now is soaring into record territory, but market breadth and volume have been weak. So is this rally for real? What about the correction we had in late February? Are we setting ourselves up for another one? Joining us with their thoughts, David Dahl. He's president and CEO of Canali Trust. He says we've seen the correction played out. Mark Pato is U.S. market strategist at Cantor Fitzgerald. He thinks another one could be in store. Good to see you both. Welcome back.
Thank you.
David, we have erased all of that correction we had in late February, early March. Now we're going to new highs. Is it all clear to the upside, do you think?
Well, I don't know about all clear, but certainly we have regrouped from where we were in February, and the biggest reason for that is that the market is seeing answers. We're getting answers on the strength of the economy for sure in terms of final sales. We're getting answers in terms of corporate earnings. And from what we see, the market likes these answers for sure.
But Mark, you're getting sweaty palms at these levels. Why?
Well, I just think short term, as we get into May, and there's a reason behind why they say sell in May and go away. May tends to see somewhat of a correction. It won't be as deep as the March low. We'll certainly hold above that level unless something big happens. The economy is doing well. All these things are coming into play in this rally. We have to look forward and say, what's the next major catalyst, which is likely to be a rate cut, but not until August or September. That's too far away to go that far out. So after taxes, we start feeling a little bit poorer, and the market tends to settle back in May, and I think we could get a 3% correction.
Well, Mark, as David pointed out, we're getting answers to some of the questions, and of course the market doesn't like uncertainty. Are we becoming a little more certain about where we are right now, Mark?
Well, I think that the earnings are the key here. One of the biggest problems was that we were worried that all these higher costs were going to really drag down profits. But with the falling dollar, and as you heard from Caterpillar and Honeywell, we're seeing strong export demand, and that is helping lift profits and take away some of that uncertainty. But we are still going to see a bumpy second quarter, and I think that uncertainty is going to reemerge once we get past this earnings season.
David, the second half of last year, the rally, we saw much of it fueled by the expectation that the Fed not only was finished raising rates, but maybe by this time this year, they would be thinking about cutting rates. What happens if they don't cut rates, as some are now talking again?
Well, it's our view that the Fed is pretty much off the table this year. We don't see a lot of action for the Fed to rely on to have them either raise or lower rates at this point. And to what Mark just said, we see the catalyst being large cap stocks. We see a reorientation to the markets because of the ability for the larger companies to really deliver to shareholders at this point of the economic cycle. They've got a lot of cash on their balance sheet, and they are shown that they're not unhappy or unwilling to share that with shareholders in the form of share buybacks or even dividends. I mean, just look at Caterpillar's number today.
Right.
We saw great earnings, revenue up 7%, earnings up 15% above consensus, as you've been talking about. But let's also talk about a 5% year-over-year share buyback number that adds to that. Yeah. That's great for shareholders.
All right. Very good. Thank you both. David, Mark, good to see you again.
Thank you.
Sue?